Hello, guys. This is Gold Sniper here, and I'm going to be making a learning video. This learning video is about smooth moving averages. Okay, this tool I'll show you where it can be found. You need to just go to, I'm using the website investing.com. There, if you will click on the indicators tab and search SMA, in short for smooth moving averages, you need to just click on it and this indicator will pop up. Okay, and this indicator you can change the length. I will you can put it 10, 5, 15, 20, etc, etc, but don't worry about it. I will explain in full details about the indicator. So what this indicator does. Okay, so I'll just put one SMA for you. This is the 50 smooth average, moving average, and this is basically what it, the line which is plotted. It tells you last 50 candles closing last 50 candles closing price. It's average. Okay, so let's say the SMA, the current SMA. I'm using the gold chart here. This on this In the 5-minute chart of gold, the current SMA is coming around 2062. That means the last 50 candles average closing price is around 2062 is what that means. Okay, now why this SMA is used, if I will tell you, I'll give you an example so you will understand the purpose of an SMA. Let's say I'm uh, a wholesale, I'm a retailer. Okay, I'm a retailer of fruits. Okay, and apple is one of the items that sells a lot. Okay, I'm talking about the fruit called apple, not the iPhone 1 apple. So if I'm a retailer of apple, so what I need to know, okay, I am buying it from a wholesaler, or like let's say from the farmer directly. So when I buy from that person, before I buy it from him, what do I generally do? I will not buy at any price which I am quoted by wholesaler, or let's say the farmer. Let's say the average price of the apple for last 1 year, okay, is like around let's say I'll use Indian rupees, but you will understand. So let's say the cost of one dozen apple, average cost of one dozen apple for the last 1 year was, let's say, around 200 rupees. Okay, 200. And if I am getting quoted, if the wholesaler or the farmer quotes me like 250 rupees or 300 rupees, okay, what will I do? I will not buy. If I will buy only what's needed, and I will not buy more than necessary. Why? Because the price is above average. I know the average price of apple is somewhere around like 200 rupees per dozen. But if I'm getting quoted, if they are offering for anything above that, then it's not beneficial for me. But at the same time, if the apple prices are lower than 200 rupees per dozen, then what I will going to do, I'm going to buy it at cheaper prices. I know the average, it's below average, and I may be able to sell it at a hefty profit. Okay, so that's what the purpose of knowing the average price is. Okay, it helps you to know whether the it is overpriced or underpriced, and when is the right time to buy or sell something. Okay, you generally sell when the price is low. You generally buy when the price is low, and you sell when the price is high. All right. So that's how you can see the SMA. Also, the SMA tells you last 50 candles closing price average. Okay, there are multiple SMAs. You have 50 SMA, you have 20 SMA, you have 100 SMA, 200 SMA, etc, etc. Now I'm going to talk about the most common SMAs. Okay, this is like basics 101. Okay, when I first started learning about trading, that time I learned about it. uh, that was the 50 SMA and the 200 SMA. Sorry, I'll just put the 200. Yeah, 50 and 200. I'll make the 200 one red for the time being. Okay, so the 50 and 200 this is when the 50 moving average crosses over 200 moving average, it's called a bullish crossover, or another word for it is golden cross. Okay, so here if you will see, the bullish crossover happened. Okay, and then price went up. Okay, similarly when the you know the the bullish, the 50 SMA crosses below, goes below the uh, when the 50 moving average goes below the 200 SMA, we'll just use the word moving average. Okay, I will not say smooth, moving average for the sake of simplicity. So when the 50 moving average crosses below the 200 moving average, the price becomes bearish. Okay, so basically, the moving averages give us information about whether the price is above average or below average, or whether who is dominating, whether it's the buyers or the sellers. We can see over here when the 50 crossed over the 200, the buyers started dominating, and price started flying upwards. Similarly, when the 50 moving average came below 200 moving average, price started moving downwards, became the price movement became bearish. Okay, so that was the basic we learned. Okay, 50 and 200 moving average crossover, this is the most basic strategy. And by the way, the 50 and 200 moving average crossover, the bearish crossover, it's called when the 50 moving average crosses goes below the 200 moving average, it's called a bearish cross or a death cross. Okay, that's just some GK knowledge for you I'm telling over here. But we will go a little bit more advanced at this level. Okay, now what the the how I use multiple moving averages like 5, 10, 100. Maybe we can ignore the 100. I'll just put 50, 5, 10, 20, 50, and 200 as moving averages. Okay, what the purpose of this moving average is, it tells us the trend. Okay, which direction price is tending, and what could be the what could be the potential support. Okay, or the potential resistance. Now, let's say for example, you can see this was Friday when gold went above 2040. You see the rally, this was a whopping $30 rally from 2040 to almost 2075 gold went. Okay, and an interesting thing, if you will observe, that the price is taking supports. Okay, this was at the 5 SMA, it took support at 5 SMA, it took support at the 10 SMA. You could see 5, 10, and this right over here is the 20 SMA. Okay, 5, 10, and 20 SMA. So the purpose of these moving averages is, like, let's say the trend is bullish, but you want to enter at the at a very good rate. So where would you enter? So these SMAs offer potential areas where you can buy it at a very cheap price, or you can say a discounted price. Okay, if you buy anywhere here, you will not get the right price. Like for example, I'll remove this drawing, just as an example I'll show you. So if I want to buy, okay, if I see this, let's say I don't see this moving averages, I don't have access, I see the price is becoming bullish, I might buy here, but I'm not getting a good, I might not get a very good risk to reward ratio. Okay, if I buy it over here. But let's say if I have access to the SMAs, okay, what I can do, I can my I can buy here at any dip towards here, or maybe pull back from here, so I can buy either here, or maybe I can wait for the price to come at the SMA line. Like over here it came, it touched the SMA line, here I entered. Okay, and I could, and any dips towards these lines below over here, that is like around 10 SMA, 20 SMA, I can just average my right, I average my trade. Say for example, let's say the price, here I entered my first quantity. If you know how my trading style is, I generally give, I'll show you on the Excel sheet so you will understand. So generally my trading style is, I let's say for example, I bought at this SMA line, which was around like 2047. Okay, 2047, I'll just write here 2048. Okay, 2051 onwards I will write. You will get it why I'm doing 2050. I'm gonna just drag it down. Okay, so what I will do, first of all, my first quantity, like I'll buy at 2047, and then I give a $4, roughly $3 to $4 range area where you can buy. So let's say from 2047, I might give a trade. Let's say, 1 second. So I may give a trade. Let's say, for example, buy gold buy gold between 2047 to 2043. Okay, stop loss 2042. So if you will see, when I give this range 2047, 46, 45, 444, I'll, let's say I'll make it 44, 2047 to 2044, stop loss 2043. So what happened at each of this price, when first price came here like 2047 approximately, my I got my first quantity, and then when price dipped till here 2046, so two quantities I manage here because the low is around like 2045. So yeah, 2045. So let's say I got 2047 one quantity, 2046 one quantity, and 2045 one quantity. Generally, my stop loss is $2 below it. So somewhere around my stop loss will be 2043, and my minimum target will be 20 pips above it. So like at 2049 will be my TP1. TP1 will be at 2049, and the next TP will be at around here. Okay, TP2 will be here and TP1 will be here. So TP1 target is like 20 pips, and TP2 target is like 40 pips. This is how I generally give my trades. Okay, so if you will the SMA line, if you will see, it is providing you like my stop loss. I said like 2043 roughly. So here would be my stop loss, and you can see my targets. It will be around like 20, 2048 and 2051 roughly, like this over here, because this we are what I'm giving, these are all scalping trades, so we are not targeting very big, this entire rally. We are already always targeting very small 10, 20 or 40 pip move, like that we are going. Okay, and that's why if you will see on my Friday's trades, I was giving multiple trades, scalping trades, because we are targeting this small, taking small targets like that. All right. So the point I'm trying to illustrate is that the SMA provides you, the areas where you can buy it, you can where you can enter the trend at the right price. If I bought, let's say, at around 2053, I might, it could have been a very expensive price, I might have to keep a bigger stop loss, like that things, etc. But the SMA helps you to get the correct entries, as well as sometimes exits also. Okay, because the SMA gives hints also if the trend is about to reverse. See, if in a bullish trend, if you will see, the lines are all very far away from each other, which just shows the you know the strength of the trend. The more bullish the trend is, the more, the more stretched out these lines are away from each other. And the interesting thing to note is when the trend is super bullish, it will not even retrace to like the 50 SMA also. It will retrace, see, if you see this trend from 2040 to like 2070, most of the times price was taking support at the 5 SMA level. Only once did it test like the 10 or the 20 SMA, barely tested the 20 SMA, but most of the time it was following the 5 SMA, which just shows how bullish the trend is. Similarly, here also, see, when the price started coming down from like 2049, okay, the SMA gave a clue that the trend could reverse from it. The trend is weakening, the bullish trend is weakening. By, if you will see, the 5 SMA crossed over the 10 SMA. So that was always, this is the first sign of a weakness. Okay, that the trend is reversing. All right, this was the sign of weakness. So that's how I'm using the SMA to let me know like the trend is becoming weak. And similarly, just like how I explained in the bullish case, in the bearish case, we are using the SMA to like identify areas of pullback. Okay, like for example, here there was a pullback, the price gave a pullback and then continued this trend. So if I wanted to enter this trend, I could wait for a pullback. Okay, price to pull back and then enter the trade. Okay, I'll give you more examples, don't worry. So here, I earlier gave a bullish example. Let's just take a bearish example. So here, if you will see the SMA first gave a crossover. Okay, this, all these crossover, the smaller time frame SMAs crossed over the bigger time frame SMA, and we can see there's a general weakness in price. Now, if I want to enter the trend, I want the price to give a pullback. So where could be the pullback area was, in the short trade was here. Okay, the price gave a pullback till here. Okay, and you can see from here it gave a very good down move also. So similar to the up move, SMA gives areas where it could give a pullback in a down move also, so that you can enter the trade as well. So that's how the simple moving averages work. Okay, and every asset class, this is in the chart of gold, I'm using 5 minutes, but also I refer to the hourly SMA and daily SMA as well, so as to get hint about or to generate the overall picture. Now today I gave a trade on BTC USD. Okay, this is an interesting example, but I did not use the 5-minute chart of BTC USD. If you will see the 5-minute chart, okay, there's a lot of there's no lot of there's no clear sense of direction in the 5-minute chart. Okay, but if you look at the hourly chart, the direction is pretty clear. Okay, the price, the trend is super bullish. Okay, and yesterday, that was on Saturday, what I noticed in a bullish trend, price was consolidating in this area. Okay, and that too, in a bullish trend, price was not going down. So, and like, if you'll see here, finally this breakout came and price went from like 38,920 to like around 39,500, for 39,500, 400 respectively. Today also similar action happened, that price was consolidating in this area, and based on that I had given my trend, and finally price did give a bull, a breakout, and now it is heading further upwards also. So like, if you'll see here, even here at the SMA again, price did take a support. Okay, so that's how I am using the simple moving averages. All right. It will take some time, or I'm what you need to do, just by me saying this you will not understand. You need to put this SMAs, check it in different time frames, different assets. Okay, so that you will get an understanding. Now for BTC USD, I find hourly chart very useful to find out the direction of the trend. But 5 minutes can be used to get very good, very cheaply placed stop loss as well. Okay, not a very big stop loss. You can do, place the correct stop loss, a reasonable stop loss you can place. For that, you can use the 5 minute, or the very short term trend also you can use the 5 minute. But if you go to something like the crude, okay, in the crude, if you use the hourly chart, hourly chart is definitely helpful, but actually crude I shouldn't speak, because that much I my expertise is not that level as it is for gold and Bitcoin, and even for currencies also, other currencies also. If you will see, okay, here also, you can see very how easily this how prices are following the trend, etc., how it is respecting the SMAs, etc., on different time frames. You can go and check it out for yourself as well. Okay, but these SMAs, according to me, are super useful if you're doing scalping trades. All right. So that's all was this learning video about. If you have any questions, you can, if you want to ask me anything, please join my Telegram channel. The link is in the description below. And thank you once again.